Hello, fellow traders. 'Tis I, the Rumpled One, coming to you on Sunday, October the 9th. The year's 2022. Let's talk trading. Weekly open-end gap. These videos are for educational purposes only. Your results may differ from mine. So we take a look and we see that all the gaps have filled. The pound gap down, closed that gap, and is now 4.7 pips above the weekly open. If you noticed, last week's pivot was missed, and we haven't hit this week's pivot yet. So it'll be interesting to see if we take out one or both of those weekly pivots. And taking a quick look at the monthly, we're 81 pips below the monthly open, 25 off the monthly low. But as you can see, we've got about a 440 pip range on the month so far. And we are putting in the opening range for the week. You can see for the month, we are just about 5 or 6 pips below that opening. No, we're about 4 pips below that opening range for the month there. So we'll see what happens. For the year, we're 2,446 pips below the yearly open, and we are 722 above the yearly low that was put in last month. You know that the Bank of England was doing some, what do they call it, easing, or they're basically trying to save the pound from just collapsing. So I guess they injected a bunch of money or something to bring that pound off of that 103.50 area. But last week, I'm sure there were some people that made a lot of money. Looks like we've got some more inside bar action on the daily, on a few pairs here, but not the pound. We had an inside bar 9 days ago. No pairs are over 100 pips in range, and we are just over 7 hours into the trading day. And the buy zone has proved profitable, but you had to take small pips. Now, there was this one nice move to the upside a couple hours ago, but beyond that, it's just take your 3 or 4 pips, be happy, and wait for the next trade to happen, which for some is hard to do. Range is barely large enough at 53 pips. And you can see that the green rats are now trying to feast. And we mentioned the pivots. Bambino Flex indicator says trade to the south. Price near the pivot goes south. And I don't think we've hit that pivot point yet. Actually, that's on H4 there. But these are the daily, weekly, and monthly pivots being shown. Here on the daily, we didn't hit that pivot at a call it 1120. And the weekly is shown earlier, a couple of missed pivots. And the monthly, we have taken out this month, but not last month. In and out and back into this lower wick zone. We know price doesn't like to stay in the wick zone right here. 73% of the time it closes outside of the wick zone. And for the range so far, 53 pips this week. We had 440 last week, but compared to the 2 weeks ago at 876 and 3 weeks ago at 621, 440 wasn't anything. Just those 2 big weeks in a row. We haven't exited the high, and we haven't exited the low. yet. So far this week's an inside bar. Range 31 off the high. High minus close, 22 off the low. High minus open 35. Open minus low 19. So actually a couple of those buy zone trades would have paid off nicely. Looking at the price action chart here, simple with the wall lines. You can see the past 4 hours were over 20 pips, so there was pips to be had at those horizontal lines. Oh, and I noticed there was one trader that passed an FTMO challenge. They were thanking me, but I'm not the one to thank you. I didn't click the mouse. I may have shown you a few ways to make a few pips, but you have to give yourself a pat on the back. Nice job trading and passing that test. And looking at the highest low, lowest high trade, you can see right here. Once again, there was some action there, and then finally it took off. So, and you'll see this a lot where you'll put in a 3-ball, or you'll come off of that low, and then it'll move up only to come back down. Usually give you a second, sometimes even a third opportunity to get in at that level. So, don't be afraid to take those pips quickly. I mean, in this case, it was only a couple of pips, but you don't want to be in a situation like this where, in fact, here it didn't even break the line, so you got to wait for it to break. But here it broke and then came back and kept going down. You just don't want to rush those trades. And right here to the downside, the same thing. It came back, gave you a second opportunity, and now it's coming back the other way. And that was about, what, 3 or 4 pip opportunity there. You just have to learn to take those pips. Now, of course, if you're looking more long term and you've got your stop loss set, you don't worry about all this price action, which some people like to call noise, but this is the price action. And looking at the range by month, nothing's changed so far. And looking at the trade reminder, I don't see any new information here either. So there was a lot of news events in the past couple of weeks, and I don't know if traders out there stayed away, if they made money, or if they got burned. But I believe Walmart and I were talking about this last week, and you just have to trade your method and not make any big changes. If you see something erratic, you can always stand aside. If things just don't look normal, there's nothing wrong at passing. Some of us, and when I say some of us, I'm including myself, we don't like to miss any trades. We want to get in on all the action, but that's not really realistic because we're not trading 24 hours a day, nor can we trade 24 hours a day, 5 days a week. So there's just going to be some things we miss. And it's better to miss something and not lose than it is to jump in and have price go against you. And that's one of the things. I was listening to something today, and it made me think how that related to trading. And they were talking about I think it was something, it had something to do with a mistake or things not going your way. And, you know, basically you have to have a plan B when you trade because everybody has plan A. You get in the trade, it gives you some pips and you make a profit. But what about plan B? I mean, plan B, you could say, well, that's my stop loss. It could hit my stop loss. But I would imagine there's some distance between entry and stop loss. Because let's say you have a 10 pip stop and you're down 5 pips, is there any reason to lose another 5 pips? I mean, really, is there any reason to lose another 5 pips? You have to think about that because if there's nothing, if you wouldn't, let's say you went long, if you wouldn't buy at your entry -5, then you should probably get out. It's just like, that's kind of the opposite side of what Mighty One would say. He says, if you're up 5 pips, and if you wouldn't add into that trade, then you should exit. But most of us, many of us, probably don't think like that. So sometimes you might have to, once again, have an exit playbook where you chart out what you're going to do. The first 10 pips going your way, and the first 10 pips going against you. If it gets to that point, what are you going to do? So if you already have it mapped out in your exit playbook, you don't have to think about it. You can just execute. Because there's a video going on, and who knows, they might even do the advertisement in my video about this one guy says every trader that took the FTMO challenge and used his mechanical system has passed the challenge. Because we mentioned before that a simple algorithm is going to beat the seat of the pants, gut instinct trader over and over and over again. So, this simple algorithm of trading with the H1 candle color at the line, it seems so simple, and it is. You just have to do it, execute it, and sometimes you're going to take a loss, but that's okay. Because many more times, as you can see, you're going to get a winner. And sometimes the loss, for example, here, the high was, 10.83. And let's just say you tried to get in and it got you in at 10.82, hit it 10.83, and before you could click your mouse, it was back to 10.81 and dropping. That's why you have to have that exit playbook, because sometimes the market just does that. You could say the broker cheated you, but you know what? That's not in your control. By the time your signal got to the brokers, maybe something happened. You can always look at the tick chart, and sometimes they just ramp it, and you could get quote unquote burned like that. Trust me, I know. I speak from experience. It happens many times where I'll get in. I went in at 80. It puts me in at 82. And then I never have a chance to get out of that trade. And it does, like right here, it drops all the way down to 1070. And sometimes I just have to take my lumps. I mean, that's just trading. So, fellow traders, looking forward to this week. Not sure what we're going to talk about. We'll find something to talk about on trading. I hope you had a fun and safe weekend, and I wish you a profitable trading week. So, when you sit down at your trading platform, always remember, never forget, it's not what you trade, it's how you trade it. So go out there and drain the banks. This is the Rumpled One, over and out.